Alright, for this video I want to cover the IRS Form 4797, and specifically we're going to be looking at how to account for the sale of Section 179 property when it is sold via an S corporation. So the reason why this reporting is a bit unique is 4797, when we sell Section 179 property in an S corporation return, the S corporation return does not report that directly on its own Form 4797. The details are actually provided on a supplementary K1 statement that goes along with each shareholder's K1. So each shareholder gets the information on the property, the date it was acquired and sold, their allocation of the sale price, basis, depreciation, and so on. So the actual 4797 that's going to report the sale is included with the shareholders Form 1040 tax return. So we've got the 1120S, the K1s. We've also got the 4797 here for our individual shareholder, and this is part of his full 1040. So we'll go through both of those items, and we'll cover this one slide here with some background on this 179 expense and some more details on the fact pattern. So when we talk about the sale of 179 property, when you are selling it through a partnership or an S corporation, again, that information isn't reported on the own entity's Form 4797. It's reported as footnotes and included with each shareholder's Schedule K1. Now, why is this information separately stated? Well, it's a couple of reasons, but the big ones are the 179 deduction. It's ultimately claimed at the owner level. So the S corporation claims a deduction. It does a test against its own business income for that limitation. But then the partner or shareholder ultimately records that expense on their personal return, and they have to determine if there's any suspended amount at their own individual level, right? And so for that reason, and also for reasons where you might have changes in ownership, people buy or sell in and out of S corporations, the item has to be separately stated because we don't know each individual shareholder's personal tax return situation. Some shareholders might have deducted the 179 expense. Others might not have had enough income, so they had to suspend it. And so each one is responsible for reconciling the sale of that 179 asset against how much Section 179 expense they deducted in the past or how much they still have that's suspended. So if we look at the fact pattern here, we have Fake Lawn Care Business Inc. It's a Florida landscaping company. And in 2022, the company purchased this lawnmower for $13,850. They used it exclusively for business, and they claimed a Section 179 deduction on the property for the full amount, so $13,850. So the entire amount of the deduction was allowed at the company level because the entity had sufficient business income to claim the deduction. So S corporations have this business income limitation. You cannot claim Section 179 at the entity level if you don't have sufficient business income. So at the entity level, they were okay. Now, in 2023, the company sold the mower for $10,000, which resulted in a $10,000 gain, right, because the adjusted basis was zero. The Form 1120S does not report the sale directly on its own 4797. Instead, these details are reported on the K1 for each shareholder. And so what we're going to look at is the K1 for John Smith, which has his allocation of the information on Schedule K1, line 17K details. All right, so let's have a look at the 1120S first. So the 1120S, we have the property disposal, but again, we don't have any information. We don't have any 4797 included here because the asset sale didn't go on the 4797. What we do is we prepare a Section 179 statement that can go along with the return. And so we have the description of the property sold. The date acquired was Feb 1st, 2022. The date sold was October 19th. The total sale price was $10K. There's our original cost basis was $13,850. We didn't have any other makers or depreciation allowed because we took a 179 expense for the whole amount. So that's why that column is different. And so we did have the amount of Section 179 deduction was the full $13,850. and that expense was claimed in 2022. Now, once you have these totals available, you can then allocate it amongst the shareholders. So this is a two-person S corporation. Each shareholder owns 50% of the stock. So John Smith is going to see line 17 information, 17K, additional K1, 179 details. So if we look at his Schedule K1, Section 179 worksheet, we can see the same information reported here, but now it's allocated 1/2 to John, right? Because he only is required to pick up 1/2 of these items. The other half goes to the other business partner. So his allocation of the gross sale price, his cost basis, and then the 179 expense and deduction claim. Now, once John has this information, he can use it to prepare the 4797 on his own personal tax return. So we've got John's 1040 here. We can see on Schedule E, we've reported the K1 information from the lawn care business. The K1, this is Schedule E, right? So Schedule E, page 2, part 2, includes the line 1, ordinary non-passive income or loss. The other items on the K1, like this Section 179 deduction, are separately stated on the 4797. So in having a look at John's 4797 here, what he needs to start with is Part 3. So Part 3, he has a gain from the disposition of property under Section 1245. So this is Section 1245 property. And so here he starts to populate the information about the sale of this Section 179 property where they took a 179 deduction. So the description up here, you can enter any description that you think is appropriate, but I think it's always a good habit to try to be as descriptive as possible. So we're indicating that this is coming through from the K1, the fake lawn care business, and the type of property was this JD Z-Track mower. All right, now the date acquired and date sold, he can find that information on his K1 disposition statement. So he's got the date acquired and date sold, so that's fine. Now, the lines 20 through 25, this requires a little bit more work. So if you look at the 4797, there is a worksheet within the instructions which cover how to record these sales for partners and S Corp shareholders. So there's this worksheet for partners and S Corp shareholders to figure the gain or loss on dispositions of property for which a 179 deduction was claimed. So the partner in the partnership or the shareholder in the S Corp should complete this worksheet to figure out the total sale price, the adjusted gain or loss, and their adjusted basis in the property. So we've populated these fields based on the information that was provided in that K1 statement. And so what's happening here is really we're looking at line items B and C. These are the key points, right? So the Section 179 deduction that was claimed was the $6,925. But notice here on line 3C, we have unused carryover of 179 expense deduction. So in this case, John has 0, meaning that there isn't any that was unused at his level or the entity level, right? So he doesn't have any suspended 179 that he needs to account for. In the case where you might have some 179 that needed to be accounted for, that would adjust your overall gain or loss, right? But in this case, his numbers jive exactly with what we see on the Schedule K1. So his adjusted basis is $0. His gain is going to be $5,000. And then the depreciation, so the 179 depreciation deduction is the $6,925. So when he goes back to his Part 3, he populates this using the information from the worksheet. So his gross sale price is $5,000. His cost basis was $6,925, and he was able to use the full $6,925 of Section 179 depreciation. So the adjusted basis is $0. So his total gain, subtract line 23 from 20, we get $5,000. And this is Section 1245 property, so we need to complete lines 25A and B. The depreciation allowed on line 22 is the $6,925. Smaller of line 24 or 25A is the $5,000. Now at the bottom here in the summary, we've got all of the property columns, line 24. That's the $5,000 from above. And then when we look at the lines 25B up here, we have $5,000 as well. So we've got 5K, 5K, line 32, subtracted 2, and we're left with 0. So the figures here that need to get reported on page 1, we report $5,000 on line 13, and we report $0 on line 6. So if I go back up to the 4797, we've got line 6, $0, and then we've got line 13, $5,000. Now, once the Form 4797 is completed, we actually need to get these details flowed through to the rest of the return. So we have a $5,000 figure on 18B, enter here, and on Schedule 1, Part 1, Line 4. So if I go to Schedule 1 of John's Form 1040, we've got Part 1, Line 4, Other Gains or Losses from Form 4797, and there's our $5,000 figure. So this is $5,000 of ordinary income, and that's because it was fully depreciated using Section 179. So we have the 179 recapture, which is the $5,000 amount. All right, so ultimately the total of additional income here is going to flow through to page 1 of John's Form 1040. So we've got the 120K there. But you see how the mechanics work here, right? So if you've got a partnership or an S corporation that's passing on property that was sold and the company claimed Section 179, you're going to have to report the asset sales directly on your personal return. This information is not going to be reported on a 4797 with the 1120S. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, feel free to leave a comment below, and I look forward to seeing you on the next one. Thank you.